This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil dropped by more than 1% on Monday after weaker than expected Chinese economic growth fueled concern over demand in the world's second biggest oil consumer, while a partial restart of halted Libyan output also pressured prices. China's gross domestic product, GDP, grew 6.3% year-on-year in the second quarter, compared with analyst forecasts of 7.3%. With its post-pandemic recovery faltering rapidly owing to weakening demand at home and abroad. The GDP came in below expectations, so will do little to ease concerns over the Chinese economy, said Warren Patterson, ING's head of commodities research.
China's daily oil refinery throughput in June rose 1.6% from a month ago, official data showed on Monday, as refiners resumed operations after completing spring maintenance and ramped up production to meet summer travel demand. Total refinery throughput in the world's second-largest oil consumer was 60.95 million metric tons last month, equivalent to 14.83 million barrels per day, BPD. Data from the National Bureau of Statistics, NBS, showed. June's figures represent a marginal increase on the 14.6 million barrels of oil per day rate seen in the prior month, although they surged by 10.2% from a low base in the same period last year.
Moving on to the top news in the energy sector.
Indian state fuel retailers Gasol and gasoline sales during July 1 to 16 declined from the same period in the previous month, preliminary data showed, as widespread heavy rain upended travel demand. Daily sales of Gasol fell by 19.7% to about 2.96 million metric tons in July compared with June, the data showed. Fuel demand in the world's third biggest oil importer and consumer typically drops during the 4-month monsoon season that begins in June as parts of the country are hit by heavy floods.
U.S. natural gas futures held near a 3-week low on Friday on forecasts for less hot weather in the U.S. Northeast, a rise in output and reduced amounts of fuel flowing to the country's liquefied natural gas export plants as maintenance is ongoing at some facilities. That lack of price movement came despite forecasts for the country's overall weather to remain hotter than normal through the end of July, especially in Texas. Power demand in Texas hit a record high for a second day in a row on Thursday, and is expected to top that on Friday and on July 18 and 19, as homes and businesses keep their air conditioners cranked up to cope with a lingering heat wave, according to the Electric Reliability Council of Texas, the state's power grid operator.
Next, we have the top news in metal markets.
China's June crude steel output rose 1.1% from May and 0.4% from a year earlier, the Statistics Bureau said on Monday, as mills were encouraged to ramp up production after steel prices rose. The world's largest steel producer manufactured 91.11 million metric tons of the ferrous metal last month. Data from the National Bureau of Statistics, NBS, showed, higher than 90.12 million metric tons manufactured in May and 90.73 million metric tons in the same month in 2022. The average daily steel output in June stood around 3.04 million metric tons, up from 2.91 million metric tons in May and higher than 3.02 million metric tons in June 2022, respectively, according to Reuters calculations based on NBS data.
Copper prices retreated on Monday after feeble economic data from top metals consumer China kept a lid on demand expectations. 3-month copper on the London Metal Exchange, LME, dropped 2.2% to $8,486.50 per metric ton by 1600 GMT, after rising 3.6% last week. Certainly we had weaker than expected GDP numbers and so far there's not been huge amounts of stimulus announced, said Amelia Xiao Fu, head of commodity market strategy at Bank of China International in London. We will now look at the top news in the agricultural sector. Chicago wheat futures rose on Monday after Russia said it was withdrawing from the agreement for a wartime safe shipping channel for Ukraine's grain exports. Corn and soybeans gained, following last week's strength, with support from concerns over dry weather in the U.S. Midwest. Chicago Board of Trade most active wheat rose 3.0% to $6.81 minus 3/4 a bushel at 10:56 GMT, earlier rising over 4% after Russia announced it was leaving the shipping deal. Soybeans climbed 1.1% to $13.86 minus 1/2 a bushel. Corn rose 1.4% to $5.21 minus 1/4 a bushel.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.